This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engine so that more folks can also discover and engage with all things microcap stocks. We're excited to announce that we'll be partnering up with MicroCapClub for our full slate of investor conferences in 2025. Ian Cassel and his team at MicroCapClub have not only built and fostered the best community of microcap investors, but it's arguably one of the best investing communities in the world, period. We couldn't be more thrilled to leverage our expertise in curating and hosting large-scale microcap conferences and teaming up with MicroCapClub to put together world-class conferences for the microcap community. First up, the Planet MicroCap Showcase Vegas in partnership with MicroCapClub will be held on April 22 through 24, 2025 at the Paris Hotel and Casino in Las Vegas. Registration is now live. Please visit planetmicrocapshowcase.com for more information. See you in Vegas. Now, my guest on the show today is Paul Cerro, CIO of Cedar Grove Capital Management. Paul was recently on Andrew Walker's Yet Another Value podcast, having a conversation about Red Cat Holdings, symbol is RCAT, RCAT, a company that we actually interviewed, which is now way back in the day in 2019 when they were still on the pink sheets. He did an awesome job on Andrew's show, and I invited him on here today to learn about his investing philosophy, strategy, and why it's not necessarily bottom fishing when looking at microcaps. Thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Paul Cerro. Paul, thank you for joining me today. How are you doing, man?
Yeah, thank you for having me. I'm doing great.
Absolutely. It's great to have you. Recording this on probably an early afternoon, I think, for you, Monday, October 21st. And, look, there's a lot to get into, but, I first came in contact with you. You did a great interview with Andrew Walker for the Yet Another Value podcast. Of course, I'm blanking on the idea that you talked about, but I refer everybody to go check out that to see Paul in action and defending an idea. It was really cool and always great to see that. But I invited Paul on here because I wanted to just get to know a little bit more about your background, how you got to where you're at today, and also launching Cedar Grove, the philosophy and whatnot. So, it starts off, Paul, when did you get that start for investing? What was your passion for? Love to hear the beginning stages.
Yeah, no, I mean the origin, I guess you would say, is actually during the
origin.
GFC.
The origin.
GFC.
That was the word. It was right there.
Yeah, no, I mean, at the time, I was just a teenager at the time, but with so much kind of happening around you, right? Like you just constantly see headlines on the TV of the S&P down, Nasdaq down, Dow down. Like I remember there's a headline of was it down? Was it 777 points or something like that? I forget exactly the number, but it was something like that. And my father was an investor at the time. He worked for Wachovia back when Wachovia was still around and was breathing. And it just really piqued my interest because at least at that time, everybody was just hemorrhaging money left and right. But then you got introduced to the concept of like, why are they losing money? Oh, they were investing. Well, what's investing? Oh, okay, stocks, this and that, blah blah blah. And then from there, just gradually just kept going. Back then, when the newspapers were still a thing, I would like read the finance section of a newspaper and like the business section of a newspaper, and it just started from there. The first stock I ever bought was Tesla, and I think that was at a split adjusted price of, I think, what is it now, like $17 or something like that. It was something ridiculous. In 2014, ended up going to school for finance here in New York City. Got involved in some investment clubs. We had an active management portfolio for one of our clubs. Got a job on Wall Street at Bank of America Merrill Lynch, covering their consumer goods and retail division for their investment side, or the investment banking side. And from there, I just kept going. I left the bank, started investing because I was allowed to. Started investing on my own. started writing in 2021, started writing on behalf of Cedar Growth Capital Management in 2022. So I've been writing for the last 3 some odd years, sharing my ideas, running a private portfolio, etc. But it's been a ride, and I've seen a lot of things, good and bad. Made a lot of dumb decisions and made a lot of learning mistakes, but that makes you as a better investor over time. But that's kind of like the short spiel of kind of like how that progression happened.
Absolutely. So then what ultimately led you to wanting to become CIO at Cedar Grove? Was it in existence, or were you one of the founders of it? I think you
No, yeah,
the
it's
founder. Yeah,
founders,
it's all your,
me, yeah, all me.
yeah.
Yeah, and that kind of stems from, so I don't want to sound bad when I say this. So I've had some great managers in my career, and I have had some not so great managers in my career. Working on Wall Street, like it's tough. It is not for the faint of heart. Like you get pummeled into the ground for everything that you do, right? Even if it's a good job, that good job lasts like maybe a minute or two until the next thing comes around. It's like, okay, great, get back to work, you know? But that is it just kind of like made me want to kind of be like the master of my own fate, as kind of cheesy as that sounds, right? Like I have no problem working for people. I enjoy working for people. I learn a lot from working for people, but whenever you're working, like for instance, at the bank, there's a lot of restrictions. Like you really can't do anything, right? It's, if you want to get compliance, you got to like give them a heads up. If you want to sell, you have to give them a heads up. It's just,
Bro,
you can't at that point.
You can't buy RCAT while at the bank. Like
No.
there's no RCAT, there's no mama at while you're there.
None. I mean, I think the best you could do, which is what everybody did, was that you just like hired an FA and like they just handled your money. And you're like, I don't even know if I want to trust you, because at the same time, it's like, yeah, I have a lot of, MNPI because of all the stuff that I'm seeing. So that's why you can't do anything. But, once you start learning these skills, you're like, I kind of want to be able to like scratch at this a little bit more instead of just, the pitching and the deals and blah, 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 blah. So yeah, that's why I was like, hey, you know what? I'd rather just do this on my own. It's going to be an incredibly uphill battle, which I'm not going to, sugarcoat. It has, but it's honestly been a great ride. And whenever you get that success in a trade or that success in a name, you're like, yeah, this is why. This is why.
Very cool. So yeah, so I actually, I got ahead of myself with a couple names there because, just going from your blog, like and from, I think the pitch was on RCAT.
It was, yeah.
And so, you've landed in small cap, MicroCap land. You're in our waters. It's wonderful. Welcome. How'd you get there? Typical story, reading the books and like finding the opportunity, how did you get involved and start looking in our neck of the woods?
Yeah. So I mentioned earlier, there's been a progression in the investing career. So it went from, again, what my background was in Wall Street, like everything is kind of like done on a quarterly basis. And I mean, I don't mean like literally done on a quarterly basis with like financials. I mean, like, you're kind of anticipating the next quarter, how that looks, how are margins, what's going to be happening, blah, blah, blah. Because that's what, traders want. That's what hedge funds want, et cetera. So you kind of like stick with that mentality. And for a while, that was my go-to. Like I was holding positions, but then I'd also like trade in and out of names, whether it be from, a quarterly release, whether it be from some type of event going on, whatever, right? And this is kind of like agnostic of market cap. This was like all across the board, but they kind of gravitated towards large caps. So what I've learned through trial and error and much pain is that I can make a decent amount of money doing that, but the stress of doing that and the alpha of doing that is just like through the roof. And that's just the game that I didn't want to play anymore. So when I, over time, as I kept reevaluating my edge, I'm like, I have a good eye on looking at young businesses that can grow. So that was part of my job, was helping them grow, right? So I can identify small companies and what can make them big. I can identify what certain changes can really impact their P&L, which should in turn impact their valuation, right? So when it came to analyze my edge, I'm like, well, it's not necessarily bottom fishing if you're going to microcaps and small caps. It's you're playing within your edge. If my edge is identifying a small company that can grow, then I can be able to deliver a lot more alpha in that arena than I can estimating if Apple is going to beat earnings next quarter and, funds are going to sell it off, right? If there's no names that you've covered on your podcast as well, but if I can hold this name for 3 to 5 years through the volatility, I should come out the other side a lot better than when I entered in, right? I can sleep better at night, and that's just from being able to weather the volatility. But that's kind of how I landed in microcaps and small caps, because it's a different game, but it's the game I want to play.
Very cool. You know what? I've been doing this almost 10 years now for this podcast, and there's always a new line or a new way of thinking about investing in microcaps that always comes up on the pod. And I got to say the framing, and you just gave me the title for our pod today, is that, because it's so true, and it's like one of those axioms when you think of microcap investing, because it's really, it isn't necessarily bottom fishing when looking at microcaps. Everyone, the wider world thinks that. Right? Most investment professionals, they think microcap penny stocks, like you are, just bottom.
Yep.
You're looking at amongst the trash heap, when that's
so not trader, that kind of thing. Yep.
So not the case. So I like that thought experiment, that line. That really resonated with me, because it really isn't. I mean, some of the best investors in the world, I know I sound like a broken record, everyone is like 1,000 times, but it's true. Some of the best investors, this is where they come to find value and opportunity and whatnot.
Well, historically, that's how it was, right? If you go decades ago, a lot of companies that went public at a very small valuation and then grew from that. Now it's different because, VC money, private money, et cetera. But that's how it was before.
Yep, 100%. So, all right. So, how would you then describe your philosophy, your investing strategy? How do you think about it when, like, okay, this is the universe I'm going to hunt. Now here is the actual strategy. My main things that I'm looking for once I go, Now, not necessarily bottom fishing.
Yes, not necessarily bottom fishing. So if I'm able to get interested in a company, right, it's because, number one, I understand it, right? So when it comes to like my area of expertise, it's consumer and retail, right? That's everything that, you and I can physically go walk into a store and make a purchase, or we can do so online, right? And then the other side of that too now is the technology component, because so much consumer oriented either products or services are now have some kind of tech component with them, right? So it's kind of like a hybrid between the two. So when it comes to operating within that space, I usually narrow it down to that, right? Then it kind of narrows it down to, are there any particular areas that I'm like interested in, right? Like whether it's, for instance, I'm just naming names out here, like off-price retail, for instance, right? Or if it's like home improvement, right? Or I know RCAT isn't necessarily consumer, but it's talking about like making military drones. Like that's just kind of cool to even learn about regardless, right? So when I'm looking at them, it's like, okay, if I understand the business, right, I can talk about one as an example, right? So I have a very large position in Gen Restaurant, ticker GENK, Genk, and it's just a Korean barbecue restaurant chain. That's all it is. It's right. It's company owned, company operated. And you look at it and you're like, there's only 40 restaurants here. And when you think about that, and you're like, Chipotle has a couple thousand, McDonald's has tens of thousands. Why are you interested in a 40 unit restaurant company? That's because if you think about it, right, if they grow, which they are, if they just add like literally, 10, let's just say 10 units over the next year or two, right? You're increasing the total unit count by 25%. That is a large impact on a company's P&L, no matter how you look at it, right? It's different when Chipotle is adding in 100 off of a base of 3,000, but when you're adding 10 on 40, that's a lot, right? And you can better understand the unit economics better. You can understand the company management better, right? Because they're starting at a point where I'll say, but as an entrepreneur, right, is looking to start and then grow. So you're able to like be in it with them, ask them those hard questions. They're able to kind of give you the answers that you want because it's happening at such a micro scale that you can understand it better than Chipotle saying, yeah, we're going to get like 10 basis points on chicken prices. Well, how is that supposed to help me? Like, I don't know what that means. So it's being able to see the runway. It's being able to see the impact of that runway, right? It's being able to see like management, how they've done so far within whatever strategy that they're focusing on. It's being able to see kind of like what type of like external impacts could affect this company and how they're mitigating it. So everything is just happening at a smaller scale where you can actually identify it so much better. And then for instance, for Genk, a lot is happening, but I understand everything that's happening, which is why something like that is what interests me. And that's why it's a very large position.
Absolutely. And I mean, no, it goes back to something that we've talked about many times on here, that like sometimes it's just easier when it's an idea that it's much easier to understand. Look, and that's not to say there isn't value in ones that are a little more complicated, but that's where the
Right,
specialists
right.
come in, you know, and they go into that and probably uncover them earlier than most, you know, the general public would, you know. But if you're finding some of these microcaps that, you know, like you have an article on Mama, you know,
Yeah,
RCAT, Gank, like these aren't difficult ideas to understand,
no,
right?
they're really
And
not. And it's also to say too, sorry to interrupt you. It's also to say too, it's not like kind of piggybacking off what you said, because it's easier to understand does not mean that there is not alpha to be made there. It's just because there are a number of reasons of why there could be alpha to be made. It's just that it plays into your edge, right? If I can understand it better, then my confidence interval is much, much higher, right? And if you look at the downside scenarios, you know, I'll be able to understand them and then not get worried when volatility knocks my position down 30% because, you know, somebody decided to sell into low volume, you know, something like that, right? It allows me to better understand what is going on and to weather the ups and downs because I don't need to get worried. If I need to get if something makes me worried in that situation, it's because something dramatically changed that I did not understand from the beginning. So that's just to say that for what you're mentioning.
absolutely. And just for full disclosure, for compliance, I think just confirming shareholder in RCAT, Gank,
Yep, yep,
GENK, and then Mama
yep,
as well, or no?
yep. All three, yes.
Very cool. All right. So I'd love to hear a little bit more also about your research process. You know, once you find something that looks interesting, you know, take us through the whole process from beginning to maybe that first initial position, and then as you continue to build into it.
Yeah. So I try not to read anybody's research if it's something that I found on my own. I try not to read anybody's research right off the gate because I'm trying to eliminate any type of bias there, right? If somebody hates it, somebody likes it, you know, I don't want to fill my brain with that, right? If there's some type of like ancillary type of research just related to the company, sure, I can read that, right? But I'd rather do the research on my own so I can establish what I believe first. And then I kind of branch out like, okay, what did this person say? What did that person say? Oh, did they make a good point or not? You know, et cetera, right? So I just dive in through all of their financials. I usually go through standard, you know, Qs, Ks. If there's anything relevant in the AKs, I'll do that as well. A lot of it's from their own press releases because you want to see what management shows you from their press releases, and then what news articles show you from their press releases. Right? They're obviously very different. So I just try to learn the company. I don't spend too much time on the financials besides like maybe like a 60-second overview. Are sales growing, right? What's happening with margins? Okay, how's the balance sheet? Where's my cash? Where's my debt? Okay, cool. Once I have an understanding that they're not about to go under or something like that, then I'm like, okay, cool. And I can keep learning, right? I'm not going to waste my time here. So then, yeah, over time, as I'm like getting my notes, I'm trying to understand things. I don't understand something, I will ask around. I'll ask specialists or experts or whatever, right? I just really want to understand what's going on so that then when I dive into the financials, I can kind of piece together, oh, okay, they said this 3 quarters ago. That makes sense, right? Oh, and then they said this is going to be coming up in the next quarter. How can I interpret that going forward? You know, blah, 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 blah. And then when I get excited about it, it's because I can put those puzzle pieces together, right? Um, and then decide for myself, like, okay, for using that example before, 10 units on an existing 40 unit base. Is that BS? Is that realistic? You know, like, how does that look like, right? And a lot of it, I will say, in my part, I can't obviously, I'm not speaking for everybody here. As an investment banker, I had to put together a lot of presentations for management that they were not wrong, they were not false, they just might have exaggerated the truth, um, and you know, cherry picked information. So I have a very good eye at knowing like what is BS and what's not BS. So a lot of my process is trying to understand what is BS and what is not BS, right? Like I understand like CAGRs can look good if you extend it out another year where something dramatically happened, or if you shorten the time frames and the CAGR got better because you excluded a year, you know, stuff like that, right? And then, for instance, in Gex, instance, right? I just kept researching. I actually went, might be an exaggeration, for the process, but I went store by store reading the reviews of every location because I can, right? There's only 40 of them. I can do that. I can't do that with Chipotle, but I can do that for theirs. So I was just reading all the reviews. I was trying to see like, what's the problem? What are customers complaining about, right? Um, it's that kind of level of thinking. I mean, you get more and more accustomed to it, and you start modeling it out. Once the modeling goes out, you're like, okay, does this make sense? Does this not make sense? Do I want to keep going, et cetera, et cetera. So, I mean, that doesn't look like any type of order in how it happens, because sometimes it's not in an order. It just kind of just happens. But, that's generally like how I look at things. But I don't get to the numbers, like the hard numbers, until I really understand like what's even going on, because otherwise it doesn't matter to me.
Yeah. And listen, it's not like there's like, there's a bunch of ganks out there where you can actually go store by store and do that kind of, get that kind of due diligence, but for each business, there is something where you can go and if they're selling some, especially if it's some kind of consumer product, like
Yeah.
or it's consumer facing in any way. There are reviews, there are things that you can go out and see. And also you're right. Like there's only 40 stores. Like, why not?
Yeah, true. And, the other point I want to make too is like, when you're looking at these opportunities, right? If you stare at the financials in the beginning, you're like, oh yeah, this is on the uptick, right? There's growing sales, there's growing this, there's growing that. It's like, okay, if you just found that out, the odds of somebody else already knowing that is pretty high, right? So like where is your edge coming from, right? If you look at the stock price of Gink, you would automatically think it's a loser, but is it? Is it not? Like what actually happened, right? So that's why you want to understand the story before you look at any type of like hard numbers in depth, because otherwise you're just kind of putting in some type of level of bias into your mind that could potentially make you miss out on a great opportunity.
So going down that road, how do you think about like, okay, I'm constructing the story around this company before I even look at the hard numbers? Do you start thinking about, well, what is the worst case scenario of this story? Do you think about that before you even look at the numbers to see if that plays out? Mostly thinking
if it's an industry that I know, right? So for instance, restaurants.
Okay.
What can go wrong in restaurants, right? It's like, okay, you can get hit by commodity prices because that's going to be affecting your four wall EBITDA, right? What's going to be happening with labor, or is like payroll going to be going up because labor costs are going up, right? How are they looking on their leases? Are they signing like 5-year leases? Are they signing 10-year leases? What kind of leases are they doing? Like, can you get information on what's their ability to get out of them, right? If you look at locations, are they going into like suburban areas or urban areas? If it's one or the other, are they trying to get into the other one, right? So right off the bat, if you're playing within your area, you already kind of know off the bat, like, okay, I should look for this, I should look for that, I should pay attention to this, et cetera, et cetera, et cetera, right? So yes, I do think about those things going in. I will say I don't obviously know everything about like even the drone industry. Like if you knew how many post-it notes I had on my desk when I was researching that company, trying to understand what was going on in this market and in this company and these army contracts, it was insane. But at the end of it, I was just like, I felt so proud of myself. I'm sitting there like, I know everything that's happening right now. But yes, to answer your question, sorry, it was a long-winded answer.
No, I mean, that was where I was going with it. Cause I mean, like, especially in microcaps like that's really what you need. That should be the first thing you really think about, right? Is, okay, what is my downside risk? How does this thesis not play out? Numbers are not like, what are some of the macro risks potentially? What are some of the headwinds coming up? I mean, you named a few of them specifically with these names, but I mean, you have to do that work. You have to understand that, because more often than not in microcaps, one of those things will probably ultimately happen, right? Because at some point in that company's life cycle, and then it's how are they built to overcome that potential headwind.
Well, yeah, because there's an example, right? Easy example with something like this is like, if I'm management, right, and I tell investors, hey, you know what, we're going to open up 10 locations this year. And let's just say this is at the beginning of the year, right? This is the beginning of 2024. I'm not saying they said this, I'm just using this as an example. And they say they guide for 10, right? But in reality, it's 8 because, they couldn't get the right construction permits to start construction, et cetera, or they needed extra time, like hiring to train, et cetera, right? So now you have a 20% delta there, right? Because 2 stores down from 10. And I'm sure the stock's going to get hit, right? But being as a logical investor, you understand how this works. It's like, okay, it's not like they're not opening them, right? It's just that they might delay the opening. So it's going to happen, just not as soon, right? So it's stuff like that you're trying to analyze it and you understand, okay, what are the repercussions? What's the downside there? Can I live with that downside? Is that an opportunity for me to buy more because I didn't buy enough, et cetera, right? And in microcap land, which I'm sure you can attest to, but those dips can be amazing buying opportunities if you're able to stem the flow. Mama's a great example of that. This thing would drop like 20 or 30% off of an earnings call. I was like, I can easily live with the issues that are a part of this. Like, thank you, right? So that's something that, yeah, as an investor, definitely you have to get used to, and if you can stomach it, that's like something like over time, right? The thicker skin you develop. It's not for everybody right off the bat.
No, definitely not. Especially, I mean, man, especially some of these names that, especially with the advent of FinTwit and, some people talking about certain names before, maybe they're, and they have those followings. Like,
FinTwit is was a great area to share ideas, share information, get new ideas, etc. Right? But it just seems that whenever you enter a bull market, whether it be 2020, 2021, now, right? The level of diligence just goes down because everything keeps going up. So they think that they're right for the right reasons, even though they're not, right? And when you see them tweet about whatever idea they're talking about, I'm sitting there, I'm like, that's not right. Like that's not even accurate. Like they don't do this, or they don't do that, or et cetera. And the second you try to chime in, then everyone just starts pouncing on you, which is a different story. But yeah, there seems to be a lot less diligence that goes on once stocks just keep go up and to the right.
not just less diligence, but I don't want to say one way or the other if it's less or more. I mean, you probably
Right.
have, because you're probably familiar with maybe whatever the name was. You're like, okay, maybe that's not right. But
Yeah.
but also the level. But I think the other point that you made that has been concerning for me also when it comes to the FinTwit community. I know we're going off on a totally different tangent.
It's relevant though. It's relevant.
No, but like being constructive, right?
Yes.
And
Yes.
and just, I mean, yeah, I know people have, they have money at stake here. They have invest. I get it. Some people are very passionate about their idea, because they're invested in it. Maybe they have a good significant portion of their portfolio in that name, but if you're going to play this game in small micro, like, you got to be open to criticism. You should be open to criticism regardless, just as a human and in life, and be able to
Sure.
to take that. But especially in this space, like, it only makes your thesis potentially stronger, or it gets you out of an idea that, maybe you missed something, and
And that right there, what you just said, I have. So the real model should really be like when you're investing. There's always a quote that floats around like, "Yeah, you never lose money." Yeah, okay, you're going to lose money. Like you can't just not lose money. But the thing is, like,
I've lost it.
especially when it comes to research, right? Because everybody thinks that research needs to be generating some level of alpha, right? On the upside. No, research is very also much there to protect your downside, right? Preservation of capital is arguably more important than making money because again, right, if you lose 50% of your money, you need to double that just to break even, right? If I have information that I've learned from somebody else, whether it's I paid for it or like whatever, right? And they're like, you know what? We think this is going to happen. Here are the reasons why. Blah 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 blah. And I'm sitting there, I'm like, oh, I did not see that coming, right? Maybe this wasn't a good idea as I thought it was, or I got to protect myself, right? Like, put contracts, like do some type of whatever, right? The research is there to help you not lose money, but there's a lot of people, especially on FinTwit, who believe that if it's nothing positive, then it doesn't warrant, a discussion. And I'm like, that's not how it works at all. I have a lot more alpha that gets generated in my DMs and my private messages than what you actually see on the live feed. We exchange notes all the time. Like, did you see this? What do you think about this? And I'm like, oh shit, I didn't see that, So that's my point there because, it's very, very important to make sure that you understand if you are wrong and to the degree of how wrong you are.
And this is why we do still love the FinTwit community, of course.
Yes.
For the DMs.
For the DMs, yeah, they're open
DMs.
too. If anyone's listening to this, you got something that I might want to know, let me know.
They're probably like, all right, so what was that idea that you saw that they put out there that was wrong? Like, but anyway.
There's plenty. I'm sure there's plenty of them. Yeah.
Yeah, and they won't stop. Don't worry.
No.
There's always the bus. The bus is always making another stop here.
100%.
But another question I ask everybody on here that I'd love to hear your answer. What would you say was an experience, an investing experience? It could be during the research process, an idea that you made money on, maybe an idea that you completely missed something. What would you say was an experience that taught you the most and maybe even shaped your current philosophy and strategy thus far?
And it's just from researching a company or trading or investing in a company?
Any kind of investing experience.
I thought about this because somebody asked me about it in a different podcast episode, but I didn't use it. And afterwards I was like, I should have said this. So early on in my Wall Street career, through a program, I was able to actually have breakfast with the founder of Carlyle Group, which I'm not sure if you're familiar with, David Rubenstein. Really smart guy, very wealthy guy, made his neck in private equity. And, we got to ask him questions. Some people are just like saying like, what would you say to me at my age, in my career, this and that? I'm sitting there like, okay, this is what I want to know. What's the best learning mistake you've ever had in your life? And he took a second because he's like, I don't expect those kind of questions. And he said that he had one that taught him humility. And I was like, can you please elaborate? And he said that when he was younger, before his Wall Street career, he was helping campaign for some presidential candidate. I forget exactly what it was. I think it was like he was going up against Reagan or something. And he's like, I felt on top of the world. I thought we were going to win. We had done all of the work. We were pounding the pavement. Like, he's like, I was basically just waiting for that newspaper to come out saying we won. And he didn't win. And he's like, and I was crushed. He's like, reality came in, and he kept going on and on. And from that experience, it helped me because, you could feel so right about an investment or a project or whatever. And it only takes that one to really bring you right back down to earth and make you realize, hey, you're not God here, right? You are mortal, right? So one thing I really took with me is what he told me. He's like, you have to learn humility, right? You have to admit when you're wrong. You have to admit when you're right. And when you're right, don't be an ass about it, because reality can kick in super, super quick, right? I've had names in here where I've taken a large position in it. I've been right. And then all of a sudden something comes out and then destroys the whole thing, right? And you just have to be able to accept that. And you have to be able to know that you're not perfect. You're going to make mistakes, right? What's the expression? If you're even right, like over 50% of the time, then you're doing great in investing. So yeah, no, it was that type of experience that I had that stemmed from his breakfast that I take with me kind of like everywhere I go now. It's like humility, making sure that you're just a good person, and then hopefully understanding that while you're an investor and there's still money behind your ideas and your trades, that you don't go into it with like some type of like overconfidence, cockiness type of attitude, because then that leads you to overlook things, which then, bites you in the ass.
100%. Couldn't agree with everything that you just said, and then some right there. That's some of the best advice that you possibly could give. And I think maybe we were talking. I forgot who I was talking to, but it's not about batting average. I guess it's about slugging percentage. I think it was Ian.
Yeah.
Ian probably said that. You said that a couple times to me. I don't know. Something like that. But look, dude, we covered quite a bit here today. I mean, my goodness, and I'm sure we'll have you back on at some point, maybe to get deeper on an idea or something like that. But any final thoughts, final words that you want to leave for an audience of folks that you want them to know more about your strategy, Cedar Grove, or just in general, maybe some new microcap investors out there?
Yeah, I'll start with like kind of the broader parting thoughts. It's I would say that I think you need to understand that your investing career is going to evolve, and it needs to evolve, right? If your investing career is not evolving, then you're really not learning anything. And I bring that up again because I want to reiterate that understanding what your edge is hard, right? Because you might think it's one thing one day and then the next day it's something else. But staying within your level of your realm of core competencies is very advantageous, right? And making sure that you can kind of drown out the noise of everybody. Like I actually wrote it in my most recent letter. We were all surrounded by everybody's year to dates up 50%, 40 something percent, 60%. I'm sitting there, I'm like, I'm nowhere close to that right now. But I'm very confident in my names. I'm just nowhere close to that right now. And that kind of stems into kind of like our philosophy here, right? Our core positions will take years to play out, right? It's not like what I used to do before where it was, I'm making a quarterly trade here, right? Every quarter, miss, hit, et cetera, right? This thesis will not play out in this year. And most likely won't play out next year. But for it to happen, it's going to take a couple of years to do. And when it does, it will rise over time and it will get recognized. So it's being able to be patient, being able to be, very like diligent and like understanding what is actually going on. It's being able to have the thick skin to endure the volatilities, the drops. I had the portfolio drop back down to 0% 3 times this past quarter, and now we're up well over double digits. It's stuff like that where I'll listen now because I'm like rambling here. Ignore FOMO. That gets you into trouble a lot more than you think it will. Just drown it out. Block them if you need to. Secondly, be patient. Good things take time, right? Fine wine takes time to become a fine wine. 3, make sure you are very open to criticism because that can save you from losing money. And again, that's arguably more important than making money. And then lastly, make sure that when you're looking at ideas that you just don't go in with any type of bias. That's probably like the broader theme here, but I'll leave with everybody. But if anybody interested that would like to understand kind of like how we do things, so this is a multi-strategy portfolio. So we have names that are long, names that are short. We have a section of the portfolio that's geared towards special situations. So we do have a few M&A arb trades going on. We do have a few turnarounds going on. Red Cat Holdings is an event-driven trade based on a U.S. Army contract. So that's going to be another special situation. And through this, we're able to allow our core long positions to have those multi-year timeframes play out. And then we're able to do strategic shorts where if we do feel like that something is overvalued, we can apply that and have that being active in the portfolio. And then at the same time, have special situations going on for a small section where a small percentage of the portfolio can definitely yield a much higher impact on the P&L if it plays out, right? So we have things that take time to marinate. We have things that will take a little less time to actually happen, Red Cat being one of them. And then other ones where, shorts, for instance, if we feel like there's going to be an issue there, to be advantageous as well. So we have long-term time horizons on positions, and then very short-term time horizons on positions. So that kind of way it balances out and keeps us in the know.
Very cool. All right, Paul, I think we're pretty much there, man. Thank you for answering all these questions. I'm sure we'll have you back on at some point to talk even further on certain stuff. But, where can folks go and follow you on social media as well as hear all your insights? I think you have a Substack as well, right?
Yeah, that's where I post all my thoughts is via the Substack. I'm very active on Twitter. It's just my name. So you can find me. I was lucky enough to get my handle. So, anywhere over there, I'm always happy to chatting with people. I'm always happy to answer questions. Please ask questions. You'd be surprised at how many people are willing to talk to you.
Very cool. All right. Well, Paul, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. And I look forward to our next chat.
Yeah. Thank you very much for having me.
Thank you.